We're live, ladies and gentlemen. Thank you for joining us today. This is Tio and the Arcane Bull. No, I don't. I see it. I will never like that. Yes, we are bullish still. We had a nice pivot point there in May. Very easy to see spring, at least as far as I can tell. Always one of the difficult aspects around, I guess, understanding scale invariance in phase C, D, and E, which are, I guess, uber important parts of our thesis, at least through time and volatility. So what we're going to do today is go over the prices just for a little bit of quick fun, and then over some of our venture capital stuff from this week, and the next few months, I guess, is basically what it comes down to. So what we're going to start with, I guess, is hey, Solana. A little bit of out of order today, but why not? Solana, new all-time highs. I guess this is probably a good place to start for a few reasons. We have a podcast with Michael Wagner from, I hope I said that right, either way, from Star Atlas. It's going to be a fun conversation. So for those of you that don't know, Star Atlas is a NFT blockchain gaming company that is building on top of Solana. Now I made a tweet yesterday saying, hey, that probably means that the ad hoc DEX to all of these is going to be Serum. And Serum had a nice day as well today too. But for fun here, the price structure is one of the parts about the scale invariant function that we've been learning about, generally under the heading of the Wyckoff theory. But the trading range itself is a pretty simple standard. It is a horizontal area of accumulation or distribution before the price moves in one of two directions, and usually quite dramatically. At the last part of this trading range, which is known as phase E, effectively phase E would be transition right here. This would be phase D. This would be phase C, this little dip around here. This is one of the difficult parts of discerning the difference between here, because both phase C and phase D can change directions really quickly. And you can actually even have moments where it jumps above the box for phase D and comes back down, invalidating this thesis and then making this the phase C. So this is one of the hardest parts around the trading range conjecture. Now that we have left that area, this is why we are bullish. There's no dead cat bounce talk here for me, because this is a new all-time high. So again, I've said this before, but dead cat bounces do not bounce to new highs. You don't drop a cat. Well, first off, just don't ever drop cats from buildings, especially tall ones. I don't know what people were thinking this year. A dead cat bounces? What type of psychopathic people are talking about trading ranges? Anyways, the point of this is this supposed dead cat bounce is not that at all. You don't bounce to new all-time highs. It's totally against the laws of physics, we know it, although we probably have some of that wrong too, which is an entirely different topic. So because we're in the new highs, and actually breaching into new highs was not just in Solana either. We actually saw Avalanche peak into new highs this last week while I was out as well. Now the thread of this high was not that much above the not high, just under it by like a few bucks. Pretty dang close though. So there's two things that are going to happen here. Number one, I think the rest of the market is going to do something very similar. I think this is going to push Bitcoin upwards of at least $60,000 to $70,000, maybe even go as high as 80. And again, this is one of the fun parts about Avalanche is, okay, so because we know that trading ranges are scale invariant, and Solana as well, technically, I mean, these are both great examples of what we're witnessing here is a new trading range. And these are the reaccumulation ranges. These are usually much shorter in time frame, and they're going to bring us to our final distribution. So it's going to go accumulation, and this is the midway accumulation too. So we know it's short, only 90 days. It's probably the kind of stepping stone of wave 4-ish into 5. So we're going to go up through one, maybe two reaccumulation trading ranges if we're correct here, and we're going to have moments where we're sideways, right? So for instance, Solana has been ultimately bullish this last week, so is Avalanche and Cardano, whereas Bitcoin has been bullish, but outside of the trading range, it's really made no jump up or to its previous all-time high, although it is almost there. That would put us at another stepping stone for Bitcoin right here. Effectively. So I do think that what we're going to witness is a new horizontal trading range take place in all of these assets, and that basically things like Avalanche and Solana are kind of leading the pack right now for that new trading range. So because of this, I suspect that we'll get some sideways action like this and something like this. What's going to be interesting here too is that ideas like 1inch, which are a little bit further behind their accumulation cycle, I think are likely going to produce a very similar result. One of the fun things about the heuristic of Compman is that speculation abodes and abounds. It has really little to do with fundamentals at particular moments like this. Fundamentals are a great long-term bet, and you want to always be leaning into that. Technicals, on the other hand, show the entire market heuristic, and that is almost devoid of thinking. What we have to remember is that the market also includes all the silly people doing silly things with their money as well. And that's really what you're witnessing, is really deep pockets interacting with people that are moved by the dollar price of an asset instead of the interest in accumulating more assets. I think this is such a great sentiment, and the way to look at trading and investing is, and again, we'll repeat this because it's a great mantra, investing is trading dollars for assets, and trading is trading assets for dollars. I think that the one-way direction of dollar to asset in a world where we only print money is a brilliant idea, especially when what we're dealing with is technology that basically works like it's money. In fact, it's a better money than we have. We know the supply, we can trust the code. Now, I'm not a coder, and even I can trust the code, just like the same way I can trust that my mouse is going to work, which is at least a huge advantage to me. So because of that, the fundamentals are actually the leading part of the thesis in investing. But the technicals are the driver of the intermediary market cycle, and regardless of asset, the price is going to move. Like we could, I'm not going to, let's, so I guess the important part here is that when we're seeing these characteristics, we've got a reaccumulation after decline. Here's our horizontal trading range. We're now in the first SOS and LPS phase outside of this much bigger trading range. They're really A, important to pay attention to. They B, offer us the secondary learning opportunities for these smaller, again, scale invariant natures of the trading ranges. It is such a hyper important part to understand scale invariance in terms of especially the whole market cycle. When we zoom out and we remember how we got here, like who or what came before at this precious moment. I realized so many of us that like the Bear Den also like Tool, so that was kind of a fun learning experience on Twitter. Where is this one? Here we go. We'll use Ethereum as an example, right? So right now, I should have left both pages open. It's a little bit, okay, here we go. So this is Ethereum on a grander time frame. You might be thinking to yourself, well, Tio, this is not a logarithmic chart. Why would I even want to look at this much data? And I'm going to explain it, I think, in a very simple, succinct way. We want a structure of an XY axis. We want to know the amount of time something's going to take and the amount of volatility that's involved, right? So we want convex volatility, and we're limited in concave volatility because we have a zero subset here. So basically this means that the asset that I want to buy, I want to buy as early as possible before the volatility through time function has taken place. Now, in what time do those things matter? Okay, well, right now for us, what we want to do is look at it in a variable function and know that the time that matters to us is the trading range itself. So people don't think logarithmically. We can't even barely think exponentially aside from the mathematics that we can write down in textbooks, which very few people have any relationship with. So because of that, what we do is instead of looking at things logarithmically, we look at them linear. We look at them in a linear format because it's the way most people are perceiving their day-to-day vision. They don't see their life as an ever spiraling aspect of consciousness. Not yet. Often most people don't see that until they die. But because of that, what we do is we measure the general masses input on how they view reality, which is not exponentially, nor is it logarithmically. So because of that, here we see this beautiful spring. This was actually a really unique moment. Now, this is Ethereum when we started getting really excited about it, was in phase D. It was very clear that it was a spring because you cannot fake a pandemic. You cannot fake that much global fear. And I don't know, hold on. Let's just delete the first part of that. You can't, I don't know, maybe you can fake a lot more than I think. I'm not going to pretend to know. The point of this is everybody got real scared, and that was noticeable. That's the part. Everybody got really scared, and it was very noticeable. Whether it was fake or not, who the hell knows? I know nothing. All I know is charts and how to make good investments off understanding psychological relationships to volatility and time. So in this moment, the human species had one of the most volatile aspects in its life that it's ever had, at least in my lifetime. This was the pandemic. This is where all the springs took place. This was phase C. You did not need a chart to recognize this moment. And every day after let's say the 15th of March, we went up and only up. And this has been talked about in so many different ideas. One of the core functions of a quote of, I think, Rothschild was, "We'll buy when there's blood in the streets, even if it's your own." And this was a blood in the streets moment. From every day after that moment, we had a bull market, and we continued for quite some time. Now we're in the middle of that bull market now, but what we want to do is pay attention to two key things. Number one, there's a smaller trading range down here, and this is what we got really excited about. It was a very noticeable trading range, and for Ethereum, that meant that the price was approximately between $100 and $320 for over, let's see, from the selling climax to the first SOS range, 600 days, approximately 630 days. This is the first area of accumulation. Now, what's fun is we remember that these are actually scale invariant functions. So technically, there is also this trading range here. And what we were able to do was buy in at the exact bottom of the Ethereum trading range in its entirety. And what we're witnessing right now is actually a much larger trading range. And it's actually probably more easily identified in Bitcoin, although I'd have to change the charts here. Let's finish this conjecture because I think it's really important. It's about time and how much time there's left. So we had, from the previous buying climax to the bottom of the spring to the first SOS of this larger trading range, it was 1,100 days of accumulation. And this is very similar to what we had looked at Bitcoin in the past. And this is actually likely the first SOS and LPS range of this entire trading range. And I think we got confirmation for that. Now, we're in a very important moment right now to understand that confirmation, because this area here, a lot of people think could come back down lower. Like, oh, this is just a dead cat bounce for Ethereum, right? Well, that might be true, but the argument here of what we're making is that the rest of the market is continuing to move into a bull market. And that did not happen at the end of 2018, where you saw other tokens continue to go higher after the end of the market cycle took place. And maybe maybe I can't say that as a blanket statement. Maybe that did happen in one or two areas, and I don't know. So I can't make that blanket statement. But the assumption that we're making here is that this becomes a reaccumulation trading range and then moves higher. These are going to be big tells for us. But I think beforehand, both Ethereum and Bitcoin are going to show us. We had 1,100 days of accumulation. We have only had approximately 300 days of movement into the SOS and LPS phase. This should usually be more than a third of the accumulation cycle itself. So if we know that we have 1,200 days of accumulation, it should be a little closer to about halfway of that accumulation cycle that you get out of the bull market. This is where point and figure charts also help in the Wyckoff method, is understanding the duration of time and volatility. The duration and time and volatility is actually based off this linear format of human emotion. For Ethereum, it was between 2018 as the climax and the start of January 2021 as the new SOS and LPS phase. That's my belief, that we actually go higher, that we go to around maybe, let's say, 6 to 8 grand, and then that's it. And then we come smashing down here and probably reaccumulate Ethereum at around $1,000 to, let's say, $3,000. Let's give it a nice big trading range. And even one point it dips down to $800 in 2024 or something crazy, who knows. So I'm assuming that what we're gonna get is a much bigger function, and then through time, because this technology is damningly interesting, you're gonna see the same moment elapse where you have a much bigger trading range that takes place. It'll come back up here, it'll do its SOS thing, and then Ethereum could be going much higher into 2024, 2025. Our thesis this whole time has been, look, understand where you are in the in the micro, because this is kind of what gets a lot of people's attention. You know, the day-to-day price movements, the prices are really high. It garners the attention of the retail trader. The retail trader jumps in, usually makes all the mistakes, which we're trying to help stop you from doing. That's why we do this channel. Help share all the mistakes we made as to not make those. Focus on the most result for the least amount of effort in every thesis that you can put on the table, because that's our goal here, and make it as entertaining as possible, which means research and focus on things that you think are interesting, which is pretty easy because all that means you have to do is be interested in learning something, and you've effectively completed all the niche skill sets to be a great investor. So if that's the case, what it does is it brings us to today. It brings us to the fact that, okay, we've been witnessing this bull market that if you were early in the bear den, if you joined at this part of the year, first off, happy anniversary, because this is around that August, September timeframe when we started screaming bull market, and we had a big chunk of people join the bear family for the first time. It was this area here. Ethereum was at around $390, $404, and we've had a huge growth in this ecosystem since then. So because of that, we're all well aware that this is the finality of the bull market, whatever it is. Or was it already over? That's what a lot of people are questioning. After this trading range, after seeing these accumulation cycles, after witnessing what's happened in Avalanche, is in Solana, I think we're going to go, I'm very confident we're going to go much higher for Bitcoin, probably around 80 to 120,000. I don't think it's going to do some crazy this time. I actually think the bull market will be a little bit more professional this time than it was last time. Last time it was very volatile. It was very retail based. I don't think we're seeing that now. These constant $100 million buys by people like Michael Saylor and their team, they know how to buy and hold. If you look at Michael Saylor, he's playing that exact strategy. They are accumulating. When they see prices that they think are low, they will double down sometimes and go out of their way to bring on trade debt for assets. Right? What are they doing? They are working on long-term accumulation strategies because that's how this game is macro played. But on the micro, again, this fun day-to-day stuff is really important because it helps you sit through the volatility with a calm ease of mind. We're going higher. That's it. Anyways, hope you guys enjoyed today's episode. Give us a thumbs up if you like this content. I'll take just one question, and then that's it for today. So let's take a looky-loo here at the YouTube screen. What does it say here? The Glasswalker says those were the days. Yes, August was a lot of fun. More professional makes sense, yes. Awesome, great to see everyone today. Really exciting. What about thoughts on Woo? I think we're chatting with them in the background. We'll have them on the show soon. Again, I'm interested in long-term fundamentals, and no matter what happens, we're gonna have a decade or two of data here. Awesome, great to see everyone in the chat today. We will see you guys again on the next episode. Oh yeah, two things I wanted to go over actually before we end off here. Boom, let's go. Yes, there it is. Manga launched yesterday, and Star Atlas is launching today. Again, we have them on the show. Star Atlas. Look at this. In the first, you had almost a 4x off Manga from the launch. Everyone gets excited about that. No one usually scoffs at 4x. It very quickly returned part of its gains, but stayed above the top of its trading range, even though it's in a very short period of time. We saw something very similar with Real Fever here too. Really interesting, very quick accumulations taking place in these niche NFT market spaces. So for those of you that have been following along in the private bear den, I know there are a few questions that you guys asked, so I'll leave this as a marker for you guys about how to get in on the IDOs and playing the kind of venture capital game. There's two things I want to note. Number one, if you don't make the IDO because you didn't know how, or you were learning how, the easiest way to solve that is to follow the companies. So with Manga or with Star Atlas is to actually jump in their Discord channel, their Telegram channel. They are primed and in the space to really help you guys figure out what needs to be done if you're interested in that. And also from the public market, this was a great 3 to 4x within the first 12 hours of their launch. Anyways, so even if you didn't get into the IDO, because sometimes there's lotteries and it's oversubscribed or something, you know, the public market is a really interesting place to keep an eye on. although we looked at Avalanche with the Bear family when Avalanche was only 30 and 60 cents in its private sale, we did actually focus on Avalanche at $1, on $3, on $12. We consistently stayed through it. So if you're interested in something, it's never too late to start using the internet. Don't think just because you didn't make the first round. Understand that the thesis is designed to say one thing: how much am I willing to lose? And what's the next step? How do I do that? Right? Look, your investment could have been $100, $1,000, $10,000. Your interest is based off your ability to understand risk and then to know that time is involved, so that every month, if you think that what you're doing was right because you have more compelling data to say that that was the truth, you invest more or not. It's actually a really beautiful thesis. It works really well throughout time. And if you guys are interested in learning more, make sure to follow Manga and Star Atlas. The gaming and NFT sector, I pivoted into, and yeah, just follow us on Twitter for fun as well. I guess once you kind of understand something, because I don't collect collector's items. I don't play video games. It's not really my thing, so don't understand it. But what I do understand is people like stuff, and they like stuff that I don't necessarily like. But that also means they're probably capable of liking stuff as much as I like stuff, right? But just not the same things. So because of that, there's this associated value through nostalgia, through experience, through all sorts of psychological, emotional overtones of how we express ourselves to the world. People usually call that ego, I guess. But anyways, fascinating conversations in the NFT and gaming sector, and NFT and collector's item sector that I'm now quite excited about. So more on those soon. Yes, join us on the live AMA today with Star Atlas, and we've got Manga Token next week, and Avagachi as well, who also falls into this kind of gaming and NFT space as we really try to expand and maintain a better container for open mentality around new ideas. This is T with the Arcane Bear. Thank you all for joining us today. We'll see you on the next episode.